This is our Forex blog video for May 25th, 2012. We're going to be releasing these new tools later today, along with videos on how to set this up and trade with it, and it should dramatically improve your trading. So it's my opinion, it's our best improvement of the software in the last 8 years. The first improvement is we have the currency meter, which we've always had, that allows you to put them over top of blank charts. Let me get rid of this. Underneath each chart is a placeholder chart, which you make a certain color, and right click on it, set hot list rank option 1. So this will put the symbol in a quote sheet or hot list that's first on there into this position, and then set chart hot list chart group option to A. And by putting your currency meter on a different layer, you can see right now it's on layer 7. It's also listed to chart group A. As soon as I turn that layer 20 on, which is where it's really saved at, it disappears, and each of these gets put onto the layer in the appropriate order. This allows us to simplify trading by having a quote sheet or hot list. Either you can use the hourly trend right here, and you're going to see it's going to show you the New Zealand's going up against 100% of other pairs, then the Australian, dollar, and the yen. The weakest one, obviously, today is the euro. So you want to be buying the strongest ones, New Zealand, Australian, dollar, and yen, versus the weakest ones, the euro, the CAD. Our currency meter is made up of the real-time trend on the top, which is made up of 5 different statistical trend tools. We're comparing the New Zealand versus all the other pairs on multiple time frames. 3 of the 5 tools that average into this measure the percentage of New Zealand pairs going up or down, and the other 2 measure the intensity. So if 100% of New Zealand pairs are going up, but they're only inching their way up, they're going up really slowly, you're not going to see extreme levels at and above this dotted 80 white line here. But when you do, it means a very high percentage of them, 80 to 100% plus with incredible intensity, are going up. Right here with the dollar. Probably 100% of dollar pairs are going up, and they're doing so with incredible intensity. The 15-minute trend shifted up, the hourly trend was still down, the weekly monthly trend was up. That's more than enough time frame trends up to be buying the dollar versus obviously the weakest one, which is the euro. And also the Swiss was earlier, before the euro, the weakest of all the ones. So basically, you want to be buying the strong ones versus the weak and selling the weakest ones versus the strong. The euro is always on top of every pair, so let's take a look at the euro dollar right here. And first of all, one of the other new features we're releasing today are signals that are designed to help you decide whether to take the trades. These are called FX trade signals, and they basically put triangles on the chart if it's a trend trade, and circles on the chart if it's a counter trend trade. And you mainly want to look for trades in the direction of the longer term trend, which in this case is the weekly and monthly trend is down. And once it's above the upper containment band, pretty high probability place to sell, sell, sell. And this one right here was the best one. You always want to wait for it to go 1 pip below the bar where it shows up low. So this, in this case, you'd be short at 25.80, and you can use our trailing stops to get you out, which would be right here at 24. Beautiful 56 pip move down. You'd be short this one right here at 96. If you use the trailing stop, you're out at 86. You made 10 pips. Another sell signal right here. If you're short, trailing stop got you out pretty much with 5 pip loss. You'd be short again when it goes 1 pip underneath the low here at 87. In this case, out at 79, not very big profit. You can also watch these. If the real-time trend strength is up, and then you start seeing it go up again with less momentum, you might just want to hold on to this trade and wait for a 2-wave pullback, which would be the fib area from here to here, and this would be a good place to look to get out. Now at that time it was extremely weak. You might get out of half your trade here and then the other half when it hits the trailing stop. But these signals are designed to help you. This one's a counter trend signal. Obviously it is right near the previous day's low, but it's extremely weak. All the time frame trends are down. If you go short right here, I always advise people to put their initial stop right above the bar's high, and as it's going down, if it ever comes back up against you, start trailing the stop down, and you can see it's near the lower containment band, and the market runs out of weakness and makes a move up. You also can use these in conjunction with our methods that we've taught for the last 5 or 6 years. One of them is an Elliott two-wave fib pullback. When the market's this weak, but it's gone down statistically too much, typically you get an Elliott two-wave pullback. So you might have gone short right here and you lost about 7 pips. You go short again right here. You might have gone out of this with 7 or 8 pips. And once you see some sell signals, you can also use chart patterns to look for some trades in that direction. This one right here went down 15 pips. We got another sell signal a few minutes ago, and it's just kind of stumbling right now. At this time of the day, being on a Friday, it's probably not very likely to continue down any further. So that's the euro dollar. Here's the euro yen, which is also a super weak one. Notice the sell signal here, 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 and when it goes down and it starts losing its weakness, or it starts getting more strength than weakness, you might decide to stop trading that currency. This one also, if you get any kind of major big sell signals, you can always draw your fibs on there. If the first one fails, sell at the fib target, and you can see if you shorted right here and it went down a little bit, you move your stop down, you lost 6, 7 pips. You short again here at 33 and you get out with the trailing stop, you just made about 16 pips. So if you lose 8 or 9 and then make 16, you're up 7. This trade right here, shorted at 04, if you use the trailing stop, it got you out at 61. Huge 40 plus pip move. And, you know, for traders that don't know where to buy or sell at, if you use a currency meter, it tells you which ones to be buying, which ones to be selling, and wait for these signals. And over time, as you learn more things like Fibonacci analysis, Elliott two-wave fib pullbacks, and so forth, the higher your odds are going to be. For example, as this one's going up, it doesn't really have off-the-chart strength, and then it goes down with quite a bit more weakness than there is strength here. You always want to draw your fibs off the last move. And this is a pullback really close to the 50%, which usually is the end of the move. Look at the daily trends down now, the weekly trend, the monthly trend. Very high probability short. Normally in the past, our rules have been shorting underneath the hourly, buying above the hourly. But using the longer term trends, these give you some pretty decent counter trend signals and are also phenomenal for people that like to scalp. Earlier today, the Swiss was extremely weak, so you would want to be buying. Let's scroll back and see how the dollar was. The dollar earlier today wasn't really that strong. Earlier at that time, the yen wasn't very strong at 3 either, but the New Zealand was. This unfortunately is not a currency that I have running overnight, so I won't have, let's put the New Zealand Swiss on here. Ask for 2 days of data, 5 pips per bar. And I'll put this on layer 7 so we can see it. You have a strong currency, the New Zealand, versus a weak currency, the Swiss. And let's add our FX trend, FX trade signals to it. Right here, FX trade signals. This has to get quite a bit of data before it puts it on the charts. And so you can see, you know, basically you're looking for some signals to buy, and when it goes above that bar's high, you get in. In this case, it doesn't look like it did, so you don't have a loss. This is another signal right here, and you always want to again draw your fibs on the last wave up to get an idea of where there's Fibonacci support. This is a 38% Fibonacci area. In and of itself, that's a very strong support and place to buy. When you get chart pattern buy signals right here, you go long when it goes 1 pip above here, 72.24, and if you got out right here, you made almost 10 pips, or if you wrote it up a 2-wave move up or off of the previous swing, it's a great place to get out of this trade. And at 24, out at around 54 for a nice 30 pip win. And the key to trading is small losses, bigger wins. The farther up it goes, the more likely you are going to want to wait for a deeper pullback before you get in. And some chart patterns reversals don't show up on this. This is real new, and I'm just continuing to enhance it each and every day. Let's look at some other trades that were available. The CAD, not nearly as weak as the euro. The weekly and monthly trend are somewhat up on this, not extremely strong like the dollar here or even the yen. But you know, strong dollar, weak CAD means you can be buying the dollar CAD. So let's take a look at this example. Dollar CAD, we'll be looking for some buys. Unfortunately, this is the first one. It's right near the previous day's high. Your best bet is to look for entries that are not right in front of major resistance areas. Waiting for a pullback to the hourly moving average is a much better trade, because if it does go up, you have the previous swing high, the previous day's high here at 95, weekly pivot and monthly pivot up here at 1.03. And so if you bought this right here at 74, you have a chance to make 20 or 30 pips on it. Now in this case, the trailing stop was still above the bar's high. You might want to wait for that to get triggered before you get in. If that's the case, you have a small break even right here. But for scalpers, if you see a pattern like this, notice on the way up it had tremendous momentum. On the way down it had very little weakness in comparison. So if you wanted, to do scalping type trades with this, you'd buy right here and put your stop underneath here. It goes up. I typically move my stop in half. Comes down, stops you out. You lose 5 or 6 pips. Notice it breaks the hourly moving average and then comes back up. It didn't have that much weakness, and all the time frame trends are up. So you get back in it again here, and this one goes up. You move your stop up in half. It continues on up. Starts going sideways right here. And you never know where it's going to go. It's going up with less momentum than it has before. The 50 to 62% fib area is a great place to get out of the trade. So I would have got out of the first half here at 82, and then the second half, when it went above this level and came right back down, didn't have as much strength as it had before. This is where common sense comes in. So you would have been out at half at 82, maybe the other half at 85. Your average exit maybe 84. You're in this last trade at 70. You made 14 pips. So you lost 5 pips, you made 14, that's plus 9. Maybe if you're not with a low spread broker, you might lose a couple more pips, but you netted 5 pips minimum on those 2 trades. Using the currency meter to identify the currencies, the signals, and then some common sense. How strong is it on the way up versus the weakness on the way down? These signals do not use the real-time tools. This has to run live for it to work. The signals show up on past bars, so you can test them over the past. You want to use the signals and throw out ones that don't make any sense. Like, in other words, you would never, if you could take the side streets to work in LA and get there in 10 minutes, you wouldn't go on the freeway. That oftentimes takes you an hour. That doesn't make any sense. So there's usually some selling at resistance areas.